All right, hey guys, I'm back with another video here. I'm going to call this kind of a follow-up training, if you will, of kind of working through the thought process on working with the footprint auto trader. Now, I'm going to do this. So I'm working in a market replay here for a couple of reasons. I'm noticing here we've had a whole lot of people take advantage of the promotion that we've been doing with the holidays, and they're investing both in the footprint indicator as well as the auto trader. And we're gonna get into this, but I'm mindful of the fact here that this is a lot of horsepower here, and this is I keep coming back to the handing a loaded gun to a chimpanzee. Maybe that's inappropriate, but my point being here, you can get yourself into a whole lot of trouble here if you're not using this correctly, because it's so fast. It's going to see things you can't possibly see in real time, and so it's got to be used carefully. And I would caution you from, well, let me back up. Let me tell you one thing you absolutely, and perhaps you've done some trialing with this. Many of you have trialed, many of you have purchased. The one thing I can absolutely promise you can't do is just arm the thing and just let it run. You'll be, I think you'll be unhappy with the results you see there. You've got to use it strategically, much like you would if you were just staring at a footprint chart. It's the same idea. The whole point of this is that it's going to give you an advantage in that the software is going to identify, in this case here we'll use some of these delta signals. It's going to identify these faster than you can. And you may be very good, but if you said, okay, I want you to spot 4 of these, it's going to take your brain a minute or two to, well, maybe not a minute or two, but maybe 5-10 seconds to go, okay, let's see, do I have an exhaustion print? Do I have a value area gap? Do I have a trap? Do I have a stacked imbalance? Right? You can't do it that fast. I mean, this software is going to be faster. So that's the advantage of it. It's going to identify these events faster than you or I can. Now, that's not necessarily always a good thing. And you've got to use this carefully, because you can find yourself in a series of trades you may or may not want to be in. So it's very important that you go through, at least 2 weeks of testing with this. I would stay in sim, or you consider micros if you want to dabble a little bit with real money. Do not go to, well, my suggestion would be not to go to full-size live contracts here without extensive testing, because there's no one right way to use this. I can't come on here and do a video and say, okay, well, if you use it this way, you're going to make lots of money. Any more than I could if we were looking at a footprint chart and say, okay, well, if you do this exactly this way, you're going to make lots of money. There's just no two people are the same. No two people read the market the same way. We're trying to take some of that subjectivity out if we can. Well, let's reduce it as much as we can. But you have to make the decision: long, short, trending, ranging, and which of these are important to you, which is kind of a bit what I wanted to focus on today. This is a combination that I use because of my style of trading. So I'm a retracement trader. I'm not, I go out of my way to avoid being a breakout trader, and in fact look to fade breakout traders. So, but that's just my style, right? Again, you may do very well with breakouts, and that may be your style, and so what you're looking for and how you're going to use this will be very different than how I use it. So what I wanted to do here, my goal here is to try and work through some decision points and show you examples of how you might use this selectively to give yourself an edge. Right, that's what we're after here. So let me do this first here. So before I get into this and I show you my settings here and the way I have it set for this video here, let me just pop over here, because I think it's really important to complement what you're looking at with your footprint chart with your traditional candlestick chart. So this would be again, it's a function of how much screen real estate you have, right? So I actually wouldn't do it this way, right? Because I've got 6 monitors in front of me. So I would have one on one monitor and one. So for example, for the ES, I might have a candlestick chart here, and then I just because I have stacked monitors, I'd have a footprint chart up above, and I'm just back and forth looking at the two. But I'm rarely am I ever just focused here. I'm back and forth looking at the two because I'm going to assume the majority of you are coming from a background working with either open, high, low, close bar charts or candlesticks. So your brain is already dialed in here. Now, what you're looking for is I'm going to make an assumption here. When we get to this point right here, you're looking for some insight. Okay, is it because clearly we've been going higher? Is this a place I actually would want to consider selling? Well, and if you're at this decision point, you're considering a short. Okay, well, let's stop for a minute. Why are you considering the short? So there's got to be a logical reason you'd be considering a short when we've just had a pretty good rip up here. Now, could be, we're overbought, could be high value. I mean, there's a lot of reasons you might be looking at it. But at that moment in time here, and this is, let's not pay attention to the time of day here. It's just for the example. At that moment in time, if I'm a candlestick trader, maybe I get a down close. Maybe I leave some wick. I mean, in this case here, there's other things going on there. But if I'm over here at here's that same decision point, right, I'm getting some additional insight here, right? Obviously, right? So not only so it's not just that I see, here I got some rejection wick here at this candle. Maybe that's sign of absorption here, or we're overextended, or buyers have exhausted. But when I get to this candle, now that's insight that I don't get here. Now, but you'll note here, look what we have in there. You see those three handles? Pardon me, three arrows. Handles and arrows. Anyway. 3 arrows, right? That's speed of the volume. So you can see how quickly we drop. All right, so we're giving you that insight here. That's our buy sell momentum, right? Which is I'm going to be kind of back and forth through a series of our indicators here, and I do understand that I have the benefit of being able to apply all of these here, and you're going to see here, as you can may well have deduced already, I've got some additional things here on my candlestick chart here in addition to just the footprint indicator. I've got our market structure indicator on both sides of these. Why? Well, I do have a destination in mind. Again, this is no magic recipe down here. This is just a combination that I like to use. And I don't, I'm not married to this. I switch them all the time, right? Again, it's kind of uniqueness of my circumstance because I'm always looking for good combinations that I could perhaps turn you guys onto. But this is one that I use regularly. So I've got immediate volume here with Hume Delta. I've got some sort of a volume trend indication here. And then I've just got momentum through the TDI, which is just a sophisticated RSI. That's what's below here, right? So now we're here to talk about footprint charts, but we don't want to be isolated. And as I said in some other videos here, we don't want to get just landlocked in here to where all we're looking at is the last 3 candles here. It's got to be in context, and I want you to continue to tap into whatever experience you've had over here on a more traditional candlestick or bar chart. We want to use these two together. All right, so it's not always, I'm here at a pivot, let's just focus over here. I want to be back and forth between these two. Okay, that point made. Now, I'm just going to pop this open for a second before we get into, I'm going to get there eventually here. I'm just going to come over here to just a blank canvas. Because this is, to some degree, this seems self-evident, but let's just for the point of review in terms of where I'm headed here. Trading really can be simplified down to just this very simple concept. I've got a swing, right? It wouldn't matter down, up, doesn't matter, right? So I've got a swing, and the market it puts in a pivot here, and we start to move away from that pivot. Now, at this moment in time, what this is the trader's dilemma at every pivot, every day, every market, every second. Are we retracing to go higher, or are we just dropping down here to break the low? Right? That is, at the end of the day, that's all trading is. We could be looking at a monthly here. We could be looking at a 10-second. It doesn't matter. And then if we were to start this way, right? It's the same phenomenon here. Am I just retracing this swing before I head lower, or I know this is simple, or am I just going on here? And if I'm just going on here, is that just, again, I'm not going to go into the algo here, but I mean, is that just part of a, get that off, is this just part of a larger retracement, right? So these are the decision points. Where's my little arrow, right? This is a decision point. These are where you've got to make those decisions. What am I doing here, right? Is there enough evidence here? What am I doing if I were to get up here and challenge that? What am I doing there? Right. I mean, so this is the reason we're seeking more insight via the footprint chart and the footprint indicator, so I can see what's happening here. What's happening here? Right, we know, of course, we know the algo, right? With that, okay, I like to think, right? Everybody now who's followed us or knows any of our tools or any of my teaching. Again, I mean, this is David Halsey's discovery here, but this is the algo that dominates the market, right? So we're all familiar with this. Okay, well now, right here at this moment in time here, am I getting help here? And what additionally do we want to look for here that would relate to what we're going to see in the footprint chart? Well, of course, part of this now, we get additional insight because of the tools that are available to us now. As the market is launching off of something like this, maybe I've got an order block here. Maybe I've got a fair value gap here because the market moves so quickly. Maybe I've got a order block up here because I came out of that, and maybe halfway down here because the market was moving, I've got some fair value gaps here that I might look for. So this is additional insight to where we can look and say, okay, if I'm coming here, if I'm coming out of this is just more, these are more clues and potential, right? This may very well, that fair value gap right here in my hypothetical may be just what the market runs into that takes us from heading this way to now heading this way. Right, so that's it, right? It's as simple. That's, again, 1 month or 5-second chart. Same decision matrix all day long. That's all we're doing. Is it retrace or are we going to break the low? Right, and then to make that even a little more challenging, right? What do we know happens down here, right? This is where often retail breakout traders are taken advantage of, because what do we know just down here? It's just like here and just like here and just like here. There are going to be stops there. Right, because we're all taught, right? That's conditioned into us, and it just makes sense, right? Well, if it takes out that low, well, I'm probably wrong. But then often what you'll see is something like this, so they'll just grab all the stops and up they go, right? And you get your classic W. So this is ultimately all we're doing all day long. When we get here, what can I tell? Do I get an edge? When I get here, do I get an edge? If there's an edge, that's all we're doing. Okay, so I made that clear. Okay, so let's get back over here. Now, here as we come to our candlestick chart, you see a nice example of this. Okay, so I'm coming down here. Well, look where I am right now. Again, it doesn't matter. This is 9:35. I've just gone back to Monday morning. Now, I know I've got a lot on here. We're going to get over to the footprint chart in a minute. I promise you that. But so here's a perfect example here. So okay, well, swing, retrace. Here's a little. We've come up, we've hit a 50 here, so I know this is an algorithm responding here, right? I've left an order block, and as I'm coming down, right, I mean, I literally just drew this, right? Oh shit, I erased it. All right, but you get my point. As we're coming down here, oh, look, I'm leaving gaps, right? So these are imbalances as I'm coming down. So if it's going to come back this way, well, note here's a fair value gap down here that I'm hitting. Now, as I'm coming back this way, hey, that's a lot of imbalance that this is going to need to get through. And even if it gets through all of those, then I've got yesterday's close, the pre-market mid, and then I got an order block up here. So who would you think has the advantage here? Well, at this moment, as we sit here looking at it, your instinct might be, well, if we get that far up, my prognostication, perhaps that's the right word, would be that we would hit some of this, and we don't know if it's this one, right? Or is it just another measured move, right? We don't know. Right? That would be my thought, right? Is it just another measured move? As I come into some of this, well, okay, I'm using these, right? That's what we're used to. That's what we're used to, is using these. Now, let's go over to the footprint chart and look at this same phenomenon, right? Because that's at the end of the day, when I get right here, can I see into that candle? All right, let's just go to the footprint chart and look at that same thing, because I do have a destination in mind. So here, now you'll note here, I've applied our market structure indicator to the footprint chart, and I happen to have the auto trader applied as well. So whether you had this or not, if you are, have the capacity or the resources to apply the market structure indicator to your footprint chart, I think you'd find this as an advantage. Now I know again it's another investment and shit, I got to buy more stuff. Well, you don't have to, but you could draw these, right? If you're quick, right? Now this is happening fast, right? So obviously advantages to having software do it, but note here, here's that same decision point. Well, right off the bat, okay, I got a delta drop, I leave behind an order block, and then I've got a series of imbalances as we come down. You can look into it and go, oh, why the imbalance? Why the fair value gap? Well, look how fast we move here, right? There's nobody on the other side, right? It can't, right? There's nobody here. Look at the thinness here on the buy side, right? So imbalance, right? There, you can see the imbalances. We come down here. Well, one thing to note here, look, test, test, test. Right, here's the exhaustion print as it comes down. So, all right. As the market starts to come back up, right, just as we just drew it here, well, okay, look at all the things I got to deal with here. Look at all the traffic. Here's how I look at it. Okay, I got a high volume node, I got a VWAP, I got a 50, I got a golden zone, and I've got 3 fair value gaps, and I've got the 21 McGinley here, which I know is a natural, that will be natural resistance. I look here, well, I wouldn't quite be at a 50. There's the 50. Maybe I'm going to get a little bit higher. Well, here I'd be right at the 50. Maybe I'm going to get to the top of that fair value gap. Now I'm at a golden zone. If I'm going to get to that, well, now I'm at VWAP in the pre-market high, and if I get through that, now I'm at an order block and the POC in a high volume node, right? So that's a whole lot of like, whoa. So if you're sitting right there, okay, so here's an example. Now we'll transition. Well, here, whoa, okay, right. Well, here comes a little bit of buying. We're coming out of a fair value gap from a prior low. Would you want to be? So would the thought be to go, let's get long? Well, do you have enough information here, right, to make that decision? Okay, great. So you're starting to see this, right? So we've got delta, the min max here it's in blue here, suggesting potential, right? Right here again, of course, I can stop it. What am I on 3 times here? Let's take that down. So I can stop it here. Okay, so I can look. Okay, and this is the advantage of why I kind of alluded to this. Well, maybe not alluded, but it's strongly encouraged. In the last video where we looked at this, you got to practice with this stuff, whether you're using bar replay or whether you're using playback mode here within Ninja. You got to practice this. So when this is happening in real time, you're over here going, do I want to get long? Is that what I want to do here? Or at this moment, as we're coming into our first order block here, well, if you didn't have this, would you do that? Right? Would you say, okay, well, if I see any signs of weakness here, let's go ahead and, again, if any of these show up, I have it set to where 2. If 2 of these show up on a candle, do I want to be short? That's, at the end of the day, it's as simple as that. Now, well, the factors, I guess, are as simple, but to deal with all of this, right, there's a lot of complexity in here, right? No 2 traders are likely to read this exactly the same way. So just looking at what you have access to. Well, here's a high volume POC right here with volume stacking right as we're coming. You can see it, right? This is the advantage of stopping and say, okay, well, look at that high volume node right there. Is that related to this? Yeah, probably. Look at the sequencing coming down with imbalances, more imbalances. They're not stacked, but every time they're highlighted, I know, where sellers are in control. Now, it's 9:34 in the market, so I'm not saying you're necessarily trading here. I'm just trying to use this as an example here. To tell you the truth, this is the advantage of playback. Now, you might remember what happened on Friday, but I don't. And you're not going to remember swing to swing. I don't remember what happened on Monday. I'm just back to Monday of this past week. Yeah, I remember what happened in the last 5 minutes on Friday, but I have no idea what happens next on Monday. Right? It's one of the advantages of playback. You can go back here and you're not going to remember. So I have not set this up because I want to take you through the thought process, and not that my thought process is any better than anyone else's. It's just I've worked with these tools, so I can give you some ideas to think about, and then you can adapt to your own style. Like as I've said before, I'm a retracement trader, so I'm never I would not even think, it wouldn't even enter my mind to be a seller down here, because that's a breakout, right? I don't trade breakouts, right? So all I'm looking at here, so if this is me, 9:34 in the morning, the week has just started. This is what I'm looking for. Do I get it? I have no idea, but that's what I'm looking for. Retracement into some of these areas of interest, let's just call them that, and then to come back down and challenge that low. Now maybe I get an algo target here, maybe I don't. But this is where my decision point comes, right? Again, assuming, I don't know, we get that high, but something like that. Now, if I get to here, all right, there's the trader's dilemma. Because it's certainly possible as we go up, right here, I'm going to leave some imbalances here. It's certain, so if I come back here, right, trader's dilemma. Is it a retracement, or are we just going to blow out that low? Right, that's it all day long. It's as simple as that. At every pivot, that's what we're trying to decide. So if I get here and I get some additional insight, well, oh, hey, I'm right, value area low. I got a high volume node. Maybe, all right, it looks like that would be the way I drew it. Looks like maybe I have a break there. Oh, maybe not, right? So we're coming right back to the golden zone here. So this is one of the reasons why I encourage you to consider this as a good location for entry, because look at the risk, right? That your stops on the other side, maybe give it a couple of ticks below that. Maybe that high volume node, you're going to tuck in here, maybe the 707. You don't have to take a lot of risk here, because if you're wrong, right, you want to be out quickly. Now, keep in mind that if this breaks, oh shit, it's going to let me do that? Maybe not. Can I draw this on an angle? Let's try that again. If we're coming down here, I don't like that. If we come down, shit, it's not going to let me do it. Now let's use an arrow here. Maybe I can do it. If we come down here and I get to this level here, is that, boy, I would be really uncomfortable shorting that. Right now, that's the breakout trader coming down here thinking, oh, okay, it's going to keep going, right? So now what, of course, right, we can all look at this and say, well, high probability there's going to be stops there. Now the breakout trader looks at that and says, oh, that's fuel, right? Because those are going to be sell stops. So those are going to get hit, and that's going to be the fuel to drive it down. Well, if you're thinking about that, what's the, oh god damn, that's annoying here. I'm gonna have to come over here. It won't, because of the spacing here, it won't let me draw on that. So let's come here. We'll do it over here just as well. Okay, so if we're coming down here, let's get this off. All right, we'll get there. Okay, so if we retrace and then we start coming down towards this, at this point in time, right? So we know we've got a fair value gap. I've got a pivot that was significant here. If we come down here, if we break that, okay, well, if you shorted it here, you're much safer, because if there's a kickback here, I'm kicking back on house money. So maybe I have a trailing stop, or a set of scalps already got their targets. So if you're sitting right here, you're just back to the open. Well, it's the same thought process. Oh, are we going to break and head lower down to here to test this next level support, or is it just another kickback before we do it again? So that's all we're ever doing. Retrace. Does it stay internal or go external? Right, here's internal that goes external. Right, you see that? So here we're internal. Here we go external. Now I go external to this swing, but I'm internal to this swing. Right. Okay, so now let's get over to putting this forward here. But I wanted to kind of get that in your head, so that as we're going through this and you're turning this on or off, or deciding on what you're going to do, that there's some consistency of that thought process here. So whether you're a breakout trader or not, I mean, I suppose if you're a breakout trader, God is going to let me do this. If you're a breakout trader, what are you expecting, right? Where do we break out, right? Is that where you're buying it? At this moment in time, no, probably not. So if you're a breakout trader, you're thinking, oh, good, well, let's break it lower, right? Let's take out the lows and down we go. Because otherwise, I don't see how you would be thinking, oh, time to be a buyer. Now, having said that, I have, for all I know, this goes up in a straight line and breaks that high. But is that the thought process that you would want to have here? What time to be a buyer? Okay, well, so let's just play it here and see what we get. Now, before I do that, right? So let's get aligned with where we are. Okay, so looking over here, right? Again, we're early into the day, right? I don't know, you may not even be trading here, but we just use this as an example because it's offered me this nice setup here with these three imbalances. Again, I do not remember what's happened here. Now, I will say this: if you have the real estate for it, since if you have this indicator, I would encourage you to consider having another time frame here. So I will keep this running on a 5-minute as well. So I mean, look at this candle. Right? I mean, here's what we open. We go straight up. This is very typical open, right? Whatever the opening move is almost always a head fake. straight up, what do? On the 5-minute, now we're hitting a fair value gap. And you'll note, right, here's where we had the imbalance, right, the stacked imbalance right here. So we come right back to it, right? We just play on this high volume node. We hit that. Oh, I don't think I have it there. It doesn't matter, right? So but you see all the way up here to talk about rejection and absorption. So looking right there, okay, does that, would your next thought be, well, I want to buy that? Maybe not, right? So again, look down here. It's just like, whoa, that was quite a bullish bar, which is why, this for location, I think the 5-minute can be excellent for looking for those locations, those areas of interest. But to try and trade off of this, okay, it I'd be careful with that, right? Because when you're going to get into the market. Okay, but it's a great, the additional, I can look down here and go, well, boy, that's whoops, I wanted, let's do it this way. This is a pretty big wick rejection down here. All right, and what do we come right to it? All right, this is pre-market. Or we come. There's yesterday's VWAP here. Right, I know from that. Okay, so let me I'm going to get to the auto trader eventually here. Right, this will I'm sure be a series of videos here, but hopefully just going through this thought process helps you here. Okay, so let's turn this on here and see what we get here. So let's go here. We'll go to twice time here. Okay, so now so let's come over to the footprint chart. Let's stay focused here. I know, all right, I know I've got, okay, so there's the breakout. Okay, is that, how quickly that turns around. So we'll see now if it's coming up here. Would your thought be, okay, I want to be a buyer or I want to be a seller? Well, I would be looking for the sell. Now, let's assume perhaps you're not trading in the first 5 minutes. Some fair. I've got a number of traders who've developed an expertise here in fading the opening move here. But this is still, it's 9:36. So usually, I'll give the market maybe 5-10 minutes to just get through that opening volatility here, and then see what I can glean from this. Okay, well, if I'm looking here, so far nothing but down. So okay, do I get any clues over here that okay, well, I got an order block down here, maybe something I want to pay attention to. All right, but I'm looking over here as well. So again, I want to encourage you, you got to go back and forth between the two so you don't lose that context. Okay, so let me pause here just for a second. Okay, so sitting right here, we've just come into a fair value gap, so let's just bring this up here. All right, so area of interest, again, maybe you don't have the market structure. Maybe you're just using a fib retracement here. Maybe you're just using just the footprint indicator by itself. Well, here, just sell, right? We're 6 minutes into the day. Now, at this moment in time, would you be comfortable turning this on to go get short? Again, that's where we have to come back to what style of trader are you. Now, if you're a breakout trader, maybe, right? I mean, I wouldn't, because of that, right? I know there's algo activity going to be there, right? I just know. I mean, that doesn't mean it can't break, but I know that there's going to be an algorithm sitting there. So I wouldn't want to sell right into it. Do I have enough here to do anything? At that location, fair value gap, order block, golden zone, I would be reluctant to be looking for the short there on the breakout. Again, doesn't mean it doesn't go down. That's not where I would be looking. Okay, so so that's kind of interesting. So we're getting some divergence here. It's like hello. All right. Well, so we got a new low here. Look what we did. We tagged the golden zone. Oh, okay, right. So even here, it's a weak low because of the break of structure. So again, let's just be. I want you to go back and forth between these two. Okay, well now if I'm looking over here, right, I see things here I don't necessarily see over here, which is why the side by side or above, below, whatever you have the screen real estate for. Okay, at this moment in time, if you're just over here, okay, do I need the footprint chart here? Well, all right, I mean, looking where I am, okay, well here's the cluster of golden zones here now. Okay, interesting. All right, there's a little turn in the RSI, maybe a little maybe buyers creeping in, but is that enough for you to be about? You're just trying to pick the turn here. And look, you've got a fair value gap and an order block right above you, as well as the pre-market low. Okay, I don't think there's a trade there. There's not enough room. You've got resistance you're going to run into here. Again, doesn't mean it can't get through. And you're sitting right here at prior support, and then look below. Okay, we got a little turn here. Now, is that enough? Well, if you just looked here, but you had one here as well. So what I'm looking for, if it's me here and I see that, well, okay, that's got my interest, but I don't have divergence. What I'm looking for is divergence if I can get it, particularly if I'm at a location like this where I'm like, whoa, that's a pretty good drop here. Do I want to try and pick the turn? Well, the old saying, buyers at lows create new lows, because if you're buying that, where's your stop? Right, directly below. So, right, whales and those that can move the market will know that. So you're just creating the opportunity for them to gun and run, just drop you and out you go, right? So that they know that. Everybody knows that, right? So then your next thought is, oh, well, I'll give it a little more room, so I'll put my stop down here, and often that can be a mistake, right? Because then all of a sudden this turns into a big breakout, right? So then now it's about your money management, right? So do you have enough room for a trade there? Is that a trade you would want to take, long or short? I would say no. There's no room there. My opinion. Okay, so let's play it again. Let's just see what we get here. This is trying to recreate all those decision matrices that you go through. Okay, well, we're coming into prior structure, right? Remember, the market will react to anything it can. Prior pivot, pre-market low, pre-market mid, opening range high, pivot. I mean, anything an algo can attach to, it will. So you after enough screen time, you'll start to recognize that. So here's the open, right? So here, right off the bat, just kind of looking here, right off the bat, right here at the edge, the value area edge. Okay, maybe. Big cluster of golden zones here. Anything, right? Do I want to be buying, selling, right? There's not enough room there. Is the footprint chart giving me any additional insight here? Well, not really, not necessarily. Any divergence here? Okay, maybe a little bit, right? Cum delta is starting to pop. Okay, let me pause that just for a second, right? So all right, let's come over here. Am I seeing anything here that would make me think, oh man, I want to start getting long? Well, you could make a case here that perhaps this is a higher, well, not perhaps, it is. It is technically a higher low. Here's the last low. We swing up, a higher low out of a imbalance, a fair value gap. Well, is that enough for you to be a buyer? Again, right? Maybe. So I know right here, just from I should note here, I'm using our volume profile, but just because it gives me a little more insight here than the volume profile that comes with the footprint indicator. You could use either, but I just know that's yesterday's low, that's yesterday's VWAP. So there's just a little bit of additional information that I get from that. So all of these, right here, I've got stacked imbalances, or I've got imbalances here. So if I'm looking here, boy, that sure would get my attention. All of this, right, of this area here, looks like there's not a 50 until I get up here, but I'm bouncing out of these golden zones here. Okay, is that right? Time to go long here? Okay, maybe. Let's just see what we get here.